Good morning, students. A warm welcome to everyone. Maybe in your part, it would be good winters. It would be chilly in some parts. It would be pleasant in some parts. And maybe in some parts, it would still be quite warm and humid. But I'm sure this morning and this session will give you all the warmth, will give you all the uh, radiance to not only charge yourself, but also charge your concepts, charge your theories, and also to radiate your professional career. Why I'm using these poetic words? For the reason that I've been saying right from day one of this topic, that if you are into taxation practice of direct tax, the most important topic that you will be looking at will be this topic, that is the business head. Secondly, as a student also, when you look at your exams, this is the topic which gains a major part of your paper. One, directly you have a PGBP sum. Two, the comprehensive sum is bound to be, you can say, a PGBP sum only. Yes, with inclusion of other heads computation, but still it is with the P&L as the base, or the information of P&L as the base. So these things make a big difference. So that is how this topic has a very important role in your professional career right now in exams, again in your final exams where you are going to deal with assessment of different entities. There also the sums are PGBP based. Then entirely your articleship, you will be majorly doing the computation in your office at the time of income tax due dates would be majorly of PGBP head. And then finally, if you take up this subject as part of your career, if you are in that domain in your career, then again, PGBP is the most common, most crucial head. Yes, thereafter the second critical head is capital gain. But the crucial and the important one is PGBP because it is the most common one. Whenever you will be handling taxation, I'm talking about direct tax, it has to be PGBP. So that is why I always pay a lot of emphasis on this, and I always expect my students to be masters of this topic. I'm sure by now you all would have understood a lot, because in the previous class only I had said that we have completed the 75% portion. Also, you were supposed to study from your module. You were supposed to solve and attempt sums from your module. And fortunately, you got this extra space of time. And I'm sure my students would have followed this instruction. So I will also want your inputs. I will also want your queries. So today's discussion will not be a session where I'll be teaching you something. Today we will be removing all the doubts, all the hurdles that may have come up to you when you were self-studying this topic from the module, when you were practicing this topic from the module. So today's session will be that type of session. Yes, very good morning, Ajay, Ashlesha, Navneet, Shamli, Deepak, Tanisha, Kuldeep, Linga R, Satish, and everyone. So very good morning to all of you all. And let us today have a great day in your career, because today you will be consolidating your understanding, your knowledge for this topic. Now, from my side, the forum is open. I want you all to come up with your questions. I want you all to come up with your doubts, your problems in this topic, so that today's discussion will not be in sequence of the provisions or in the sequence of these notes that I have drafted. Rather, they would be in sequence of your doubts, maybe doubts in practical, maybe doubts in any theoretical provision, and at the same time, revising that provision. So today's will be, see, there are two ways of how companies sell their products. Either it is demand push or it is demand pull. So today I want it as demand pull. So you will pull out what you want from me and accordingly we will proceed. Chalo. So now it is your turn to ask questions. You want me, I'll unmute you. You want to type something, you can put your query. You want to refer to a module page, you can give that page. Chalo. Come on, students. It is now your turn. Yes, everyone. Let me know your questions, doubts, students. Yes. Yes, Ajay, Chandana, Satish, Nikhil, Lakshita, Priya, Shamli, Pooja.
Good morning, sir.
Good morning, Navneet. Tell me.
Yes, sir. Sir, actually, as you have taught us, every law and compliance of this income tax chapter is clear now. And sir, last time मैंने क्वेश्चंस जो थे स्टडी मटेरियल के सम्स उनको सॉल्व करने की कोशिश किया सर पहला एग्जांपल ये डेप्रिसिएशन से रिलेटेड है
पर
आई
मैंने
थिंक
आपको मना किया था ना, इफ यू रिमेम्बर, मैंने स्पेसिफिकली कहा था कि आपको कहाँ से सॉल्व करना है, इफ यू
नहीं
रिमेम्बर।
मैं नीचे के क्वेश्चन सॉल्व किए थे मैंने जो कि क्वेश्चंस आफ्टर कंप्लीशन ऑफ द चैप्टर है तो
हाँ,
उसमें
और
भी
उसमें मैंने आपको ये स्किप करने को कहा था, हैड आस्क्ड यू टू सॉल्व फ्रॉम क्वेश्चन नंबर 3.
तो सर एक्चुअली आई हैव सॉल्व 2 or 3 क्वेश्चंस वेयर इट वाज टू ऐड एंड लेस फ्रॉम द नेट प्रॉफिट ऑफ द
एग्जैक्टली वही करना था आपको, वही करना था बेटा.
तो सर इट इज डन फ्रॉम माय साइड आई थिंक एंड आई वांट टू नो द डेप्रिसिएशन प्रोविजंस एंड अदर
That is okay. So that is, see, new provisions I'll teach, but today we'll first consolidate our understanding because we have been studying this topic for past 2 3 lectures. So today's time is for consolidating, right? Before we go to new. So
so sir, I
in
think
huh,
yeah it
tell
is
me.
clear. Everything is clear like 40 uh, सब 28 to 41 जो भी सेक्शन है उसका जो कि डिसअलाउंस करता है कि 4 कंडीशन अप्लाई होनी चाहिए
Hmm,
करंट रेवेन्यू नेचर का होना चाहिए नॉट फॉरबिडन लॉ होना चाहिए सारे सब कंडीशंस तो क्लियर है
hmm. ठीक है बेटा. Done.
थैंक
Thank you, बेटा. Yes, others. See, students, the more you are able to ask questions, the more we'll be able to go deeper into the conceptual part. Yeah, Shamli. So specific section questions are going to be there now, but I have specifically asked you only to do comprehensive sums because specific questions that you will be able to do once you read the provision. In that also, like the section which you are mentioning, 35 DDA, that is okay. 35 DDA you can also solve because it is not that critical. By reading the section, it can be solved. But like what Navneet said, the question on depreciation, then some questions on scientific research. These few questions will require first some explanation from my side. Yes, Shamli, if you remember, we had discussed this that CSR expenses have been specifically made disallowed under PGBP. Though I am of a different view, it should have been allowed, but there is a specific disallowance under Section 37. That is why, when as a company you are doing compliance of your CSR, which is an obligation put upon you by the Companies Act, but since there is a express specific disallowance under 37, we won't be able to do it. So you're right. So this point, I request everyone to note because see, this is how it happens. When you take up practicals, the theory, the provisions gets more consolidated. It is very difficult to only learn the section numbers. But now when we will approach the questions and we'll do it with sections. Today I'll teach you another approach also of studying any subject, specifically law driven subjects like income tax, GST, company law, audit. That approach will help you because many times I've seen students get bored with law subjects because it requires a lot of learning, remembering sections, remembering provisions. But today I'll give you an approach. That is what I want to do today. Not only teach you, but also to give you a study approach which you can apply not only this time, every time in your life. Because see, as a professional, the most common thing that will happen with you, and especially in today's scenario, is changes. Every time there would be a change, and you should be competent to do it yourself. That is what we'll be doing today. I'll teach you the approach. Uh, Shravan is asking, sir, the TDS of earlier year, which is deducted in the current year, should be filed subject to due dates under section 139. No, very good question, Shravan. So I'll take this question to start my deliberation. Then I have some few other questions put, but I'll start from this question because this is one of the most crucial sections, I believe, in PGBP. And if you remember, I had said that this is one of the most technical sections in the Act also. What is this section? So this section is about disallowance of expenses basis TDS provisions. So now I will discuss this question taking practical examples specifically on the basis of what is asked by Shravan now. So let us understand this question. In the meantime, others may post their questions. If somebody wants to unmute and ask, then once I'm done with these present queries, you can even unmute yourself. Now see, what is the ideology, students? This is your P&L. Now I'm saying P&L, why? Because our sums majorly would be having P&L given, or they would be having the P&L related items given. So you should always visualize a P&L and see one more very important approach of studying, of recalling things is try to diagrammatize whatever you are studying. And when you diagrammatize, things are easy to retain, things are easy to apply. Like this add less. Many times students get confused in add less. But that is why right from day one, because from day one we have been studying this reconciliation. I have shown you the reconciliation and I've linked the reconciliation with P&L so that it is very easy to understand what to add, what to less. So coming back, now we are talking about our profit and loss account. Now, when I'm saying profit and loss, please presume it also covers trading account. It also covers manufacturing account. So it is a total financial statement, not only the P&L portion. So, and this is for your financial year 25-26, which is your previous year. Now, what this section 40 clause A requires, it says that there are many expenses in your P&L which are covered under the TDS topic So this is one of the important topics of income tax law, where as a payer, now please understand these terms. In case you find any of these technical, let me know. So in respect of any of the expenses that you are incurring, you are the payer because you will be paying for these expenses to the respective persons. So like if your premises are on rent, you will be paying rent to your landlord. For your employees, you are the payer of salary. For the contractors whom you have hired, you will be making payment to them of their contract charges. If you have hired professionals in your business for carrying out various professional services, you will be paying them professional fees. So you are payer of all these expenses. Now, out of all these expenses, let us say 75% of them are liable for TDS. Now, one thing which you have not yet studied in detail is TDS is applicable to whom? So obviously payers, that is who will be making payment of expenses, they are required to do TDS. But in this also, there is some categorization as to which payer will have to follow TDS and which payer is not required to do TDS. For the time being, I'm not getting into that differentiation because that you'll study in detail in TDS chapter, and maybe here in one of the sums when it will come, I'll go to that point. But for the time being, we are proceeding with this point that you are the payer of expenses to whom TDS provisions are applicable. Now, the moment TDS provisions are applicable, so what does TDS chapter requires? That all these expenses, now also understand one thing. Today we are in this financial year 25-26. Every day as a business, you are incurring these expenses. Now, when I'm saying incurring, it means two things. Either the expenses are becoming due, but you will pay it later, or you are making payment of the expenses immediately, or you are making payment in advance and expenses would happen, or that particular transaction of expense will happen in future. So you are every day having these expenses in the business because for running business, every now and then you are incurring some expense. Now the TDS chapter has asked you to deduct TDS of these expenses, and every month whatever TDS you are deducting. So let us say we are in the month of December, it has just started. So in this month, whatever TDS you have deducted, that you should deposit in the next month. This is the general rule of TDS chapter. But remember one thing, right now we are in the PGBP chapter, and PGBP chapter will look at your P&L only at the end, that is after this entire year is over. So today nobody is looking at PGBP chapter. Please understand this thing practically, because today nobody is computing their incomes. You will be computing incomes only after this financial year comes to an end, that is in the next year, which is called as your assessment year. Now pay attention. Now by next year, you have already incurred these expenses and you have drawn this P&L. So next year, when you are preparing your final accounts, you have a position in front of you that out of my total expenses, these 75% expenses are covered in the TDS chapter, that is on which I was supposed to make TDS. And you already know whether TDS has been done or not. Now, what PGBP wants? PGBP chapter says that TDS chapter has its own timelines. Timelines for two things. One is for deducting the tax. One is for depositing the tax. So deducting the TDS and depositing the TDS. But those timelines PGBP is not following. PGBP says, I just want to ensure or check one thing, that if you want to claim these expenses as deduction now means when you are doing the computation. So my first requirement is you should have deducted the TDS any time during the previous year. Why I'm stressing on the word anytime? Because as I said, TDS has its own due date for deducting TDS. You may have deducted, may not have deducted, that is okay. But at least by 31st of March, and now this date you have to always check in the questions. So up to 31st March 26, which is the end of this previous year, you should have deducted TDS. Second, now this is linking Shravan to your question. Second, For this expenses which are of financial year 25-26, of which TDS has to be deducted by 31st March. If you have deducted this TDS by 31st March, then you should have also deposited the TDS by the due date of filing returns for this financial year, which will fall on these dates. So, Shravan, answering your now coming more specifically to your question, along with revising this section. So, the expenses are of 25-26 only. Let us use the word current year. So, the expenses are of current year. The TDS should have been deducted anytime during the current year and should have been deposited anytime up to the due date of filing returns of the current year, which will fall on 30th November 26 for international transaction assessees, for tax audit assessees and companies and their partners on 31st October 26, and for other assessees 31st July 26. If you do this, the expenses are allowed. 40 clause A has no problem. If you fail to do this, 40 clause A has some disallowance. But right now, I'm not revising the disallowance because your question is not on the quantum of disallowance. Now, I'm particularly going to answer your question. Now, let us say in this same financial year, 25-26, you have also paid the TDS of some earlier year expenses. So let me give you example 23-24. 24-25, these are some earlier years, earlier to the current year. Of these earlier years, you have some expenses of which the TDS was deducted in that year, but you did not deposit the TDS in that year up to when? Up to that year's return filing due date. Fine. So obviously these expenses would have been disallowed then. Now, if you deposit the TDS in the current year, now when I say current year means only the current financial year, that is between 1st April 25 to 31st March 26. If any time during the current year, or in the income tax language, any time during the previous year, which previous year? The previous year we are talking about, that is 25-26. If you have deposited the TDS of early years, I will give you deduction this year. Now, in this case, everybody please pay attention. When I'm depositing earlier periods TDS, then this date up to filing the due date of return of this financial is not allowed. I should have deposited within the financial year or the previous year itself, not up to the due date of this financial year. So let us say I am a company or a tax audit assessee. So for me, the due date for this previous year or financial year is 31st October 26. If I deposit it after the end of this current year up to my due date, I will not get deduction in the financial year or in the previous year 25-26. So for getting the deduction in 25-26 of earlier year expenses, the TDS should have been deposited in the previous year itself. But where I'm talking about the current year expenses itself, the TDS should have been deposited by the due date of filing returns, which will extend up to the next year, that is somewhere up to 30th November 26, 31st October 26, and so on. Sean, I hope your question is answered, and I hope others have also understood this, because this is one of the points where students may get confused while applying these provisions. Okay. Shamli is asking me a particular question. 4.2. Okay. So I'll just go to this adjustment directly first. So what is this? Examine with reasons for the following subdivisions whether following statements are true or false. Okay. So all are independent points, students. Here you have to simply take up one point and answer or check whether it is true or false. Now, where a person follows mercantile system, expenditure of rupees 25,000 has been allowed on accrual basis. Very good. And in a later year, in respect of the said expenses, assessee makes a payment of 25,000 through a cross check. 25,000 can be profits and gains, etc. in the year of payment. Very good point. Now, let us now, from this question, go back to our respective section. Now, you all would know that whenever it comes to expenses which are to be paid or not, the relevant section is 43B. Now, we will revise 43B. We will understand this question that Shamli has posed from our module, and we will try to first decode the question also, because many times students, it may happen that you have understood the provision, but understanding the question is very important, because if you have not understood the question or if you have misunderstood the question, then despite of knowing, recalling all these sections, it will not help. Okay. So what is the provision saying? Let us understand. Now there is a section 43B, another section creating disallowance. What does this section says? It says that if you are following the mercantile system of accounting, then only 43B applies. Now for this, let me first introduce you to one more section which we discussed in the previous class. You have a section 145 which deals with method of accounting. And it says specifically for two heads. One is this current head PGBP and the other head other sources. We are giving you a choice that you may follow cash basis of accounting, you may follow mercantile basis of accounting. And what is the impact? Impact is you decide which method of accounting you want to follow, and basis the method of accounting, we will decide the allowability of the expenses. Now let us say somebody has adopted cash basis. So how all the expenses under PGBP will be allowed? So again, for your diagrammatic visualization, I'm drawing the P&L again for our previous year. So if you are following cash basis, so let us say this is your cash basis P&L. So you have debited salary, you have debited rent, you have debited interest, you have debited different expenses. All expenses, all will be allowed as deduction only if they are paid. In fact, cash basis requires that only those expenses be considered which are actually paid during the year, because that is what is cash basis of accounting. Second is, which will happen in majority cases, that the assessee is following mercantile basis of accounting. Now in this case, again same expenses are there, but here for all expenses, now payment is not required. Only for few expenses which are listed here in first 6 points, the deduction will be allowed if these are paid. And interestingly, it is not necessary that they are paid up to the end of your financial year, that is up to 31st March 26. Again here, like TDS, they have given you extended time to pay it up to the due date of filing returns. So the expenditure is of your current year or your previous year 25-26. And even if you paid up to your due date of filing returns, which I am for the time being assuming is 31st March 26 in the next year, even if these few expenses are paid by you, not kept outstanding, we will give you a deduction. So it would be payment of taxes to government and mainly indirect taxes. Why? Because direct are anyways disallowed completely under 40 clauses. So it has to be GST, customs duty, in some cases excise and VAT, where the excise and VAT are still continued on few products. Second, where you have taken loan from any bank, financial institution, the interest should have been actually paid, not kept outstanding. But up to when? Up to this. Then expenses relating to your employees. One is bonus commission to employees, leave salary, not the regular salary, only leave salary, and your contribution in the various funds of the employees. These should have been actually paid or deposited by you up to your due date. So maybe these are appearing outstanding as on 31st March, but in the next 6-7 months, till you are liable or required to file your returns, you have actually paid them. Or where you are using Indian Railway assets and you are required to pay to them some rent or usage charges, that is also paid. So for few expenses of which names are appearing on the screen, the requirement is these expenses are allowed only if they are actually paid. I'm keeping seventh aside because seventh requirement is slightly different, though on similar lines, but slightly different. Now, this is the provision which we revise. Now I come in particular to Shamli's question, which is relating to this particular point. Now, interestingly, when you read the question, it appears to be a 43B question, but it is actually not a 43B question. It is a 40A3 question. But purposefully, I took the opportunity to revise. So firstly, 43B we revised because when you read payment, the first bell that should ring in your minds is 43B. But let me tell you, the expense or the condition that you have to check is of 40A3. No problem. Anyways, we are revising, so we have to revise. Now, if you look at the question from the point of view of 43B, there is no problem because 43B requires the payment to be actually made up to the due date of filing returns, but only specified payment. This is important. Why I emphasize on 43B, why I showed you two P&L, because when students are reading 43B, they are misinterpreting 43B to mean that it applies to all expenses. No. If you are a mercantile assessee, you have rights to take expenses on accrual basis and not on payment basis. Only few expenses out of all, only few, those 6-7 expenses are only the one where actual payment is required for getting the deduction. Now, what is 40A3 saying? Again, what is 40A3? Now, 40A3 applies again to all expenses, all. It says that all of these expense, yes, there are some exceptions. So barring the exceptions, all these expenses, whenever you are going to pay, because you have to pay today, tomorrow, whenever you are going to pay, you have to apply the requirement or the restrictions of 40A3, which says that whenever you are making payment of any of these expenses in a day against a single bill which exceeds 10,000, it will be allowed only if the payment is made by account, pay, check or draft, or by some approved electronic modes, the names of which are given. Now, interestingly, what is the point? Let us say we are talking about an expense called as purchases, very common. Some 50 crore purchases are debited. Now, interestingly, purchases are not in the list of 43B. So it is not in this 7 items. So purchases, even if they are outstanding throughout this year, no problem. You can still get deduction because 43B is not applicable to purchases. So let us say out of 50 crore, 5 crore purchase bills were outstanding throughout your previous year. But still, in PGBP, as purchases are not part of 40A, 43B restriction, you took deduction of entire 50 crores without any problem. Now we are talking about the 5 crores which you did not pay in this financial year. Why? Because you have credit terms with the creditor and he is allowing you credit, so you'll be paying it later. Now, interestingly, you pay it in the next financial year. you will make payment of this outstanding purchases, that is creditors. So you are making payment to your creditors. Now please understand one thing. In this 25-26 computation, you have taken deduction of entire 50 crores because all conditions, the four conditions are satisfied. None of these restrictions apply, or whatever restrictions were applicable, you have already satisfied the restriction. So you could claim deduction of entire 50 crores. So even this 5 crores which were outstanding, you have taken deduction in the previous year 25-26 computation itself. But these 5 crores were actually paid in 26-27, that is next financial year. And while making payment of these 5 crores, you breached the condition of 48.3. How? In this 5 crore, there was one bill of 25 lakhs. One bill where, because the person was in urgency, instead of going by this any of these mechanisms, you decided to pay cash or by crossed check. Now that day itself I have made clear that 40A3 does not allow payment by cash or by cross check or even by bearer check if you are fitting in 48.3. That is where in a day the payment exceeds 10,000. So your payment of one bill is 25 lakhs, which is definitely fitting in 48.3 requirement. And as per this question, what it says, where a person follows mercantile system. When you read this, you get an impression they are talking about 43B. But as I explained you 43B also because we needed to revise. So we revised 43B. This question is not of 43B. What it is saying, there is an expenditure of 25,000 which has been allowed as deduction on accrual basis. So this is what I was explaining. In 50 crores, you have taken the deduction of this expense already because there was no barring, so it is allowed. But in the later year, so I'm talking about the later year. So in my example, 26-27, the said expenses, you made payment of this 25,000 through cross check. The moment this cross check, bearer check, cash comes, you know that this is now 48.3 and not 43B issue. Now, what is the point? That I allowed you deduction of the full 50 crores in the previous year itself, 25-26 computation, because the expenses are of 25-26. That year, out of total, let us say 5 crore were outstanding, but that is also allowed because there is no restriction under any section, no 43B restriction. So I allowed you entire expense on accrual basis. But in the later year, so as I gave you example, let us say next financial year, when you made payment, you breached 48.3 requirement because you made payment by cross check. Now, students, when this will happen, what will be the position? So you claimed full deduction of 50 crores in 25-26 because the expenses are of 25-26. But in 26-27, some amount. So here I'll just change this instead of 25 lakhs. Let us make it 25,000. So to match with the original question. So in 26-27, you breach the condition of 48.3. Now, what does the law says? If you remember when I was explaining these sections, I had kept some part pending. So I'd marked this. I said that this I will cover in the next class. Why? Because I did not want to overload everything. Now this part which I had left aside is what is being referred in this question. So what is it? If an expense is allowed on due basis, exactly that is what is the question. But in the subsequent year, when the expenditure is paid, you have done the default of this section. So exactly this paragraph point is covered in this question. So now in 25-26, you have defaulted. Now, interestingly, this expense was fully allowed in the previous year itself and in the next year. So now I'm drawing P&L of 26-27. This expense is not there. Why? You will have new purchases, but this old purchases is not there. That deduction entirely you have claimed. But out of that, some amount is now liable to be disallowed. So how do you disallow it now? So 40A3 says that since you took full deduction in the previous year, but in the next subsequent year you have done default, now treat it as an income. So the effect, what this section 48.3 says, that I want to now disallow it. So how I disallow it? Now treat it as an income. So let us read this. So if an expense is allowed on due basis in some previous year, but in subsequent year you commit the default of 48.3, the amount paid shall be treated as income of that subsequent year. I hope now this part will be easy to understand with this example. So this 25,000 will be treated as income of that subsequent year where you have done the default. Correct? So first understand the provision. So I allowed the full expense in 25, 26. In 26, 27, I've done default. So it has to be treated as income of 26, 27. So that will be added to your next year's PGBP income. This is what it says. Now coming back to the question. So what it says, uh, assessee makes the payment of 25,000 to cross-check. 25,000 can be the PGBP under 48.3 in the year of payment. Now, Shamli, you will answer this because I've explained you had the question. So your question is, कि sir, question 4 bracket 2 payment is made through cross check under Manka 9 system is allowed or not? So definitely it is not allowed, Shamli. But now what will be the treatment of this non-allowance? It will be treated as income of this year. That is the year in which you have made the payment. So what will happen? So read the question. Now see, now reading the question and understanding the question is also important, as I said. So now you have understood provision. What you should have done, you should have taxed it in 26, 27, right? But what does the language says? Because you have to answer in true and false. So now understanding question is important. You may know the provision. It is now your taxable income, or it is now to be added in your PGBP in 26, 27. But what will be the answer for this? Let us read the question again. The person follows mercantile system. Expenditure of 25,000 was allowed on accrual basis. So I'm taking example in 25, 26, you have taken deduction, and in later years, so I've taken example in 26, 27. The assessee made payment of this through cross check. So you breached 48.3. What does the question says? Because you have to answer in true and false only. Rupees 25,000 can be the PGBP, that is the profits and gains of business, under this section in the year of payment. Answer is true, because this will be treated as your income in 26, 27. So you'll see your answer has to be true and false. And for answering true and false, you have to be first clear with what the question. See, this is the beauty of question or exams. Knowing provision is one thing, but applying it to the given question is very important, because here you have to only give answer as true or false, yes or no. So answer is yes. It will be PGBP income. See, what is the last line? It says 25,000 can be the PGBP under this section in the year of payment. Answer is yes. In fact, this is what the law says. Since you have done disallowance in 26, 27, this has to be treated as your PGBP income of 26, 27. So answer is yes, true. Correct, Shamli? So in the next year, you will call it as income. Students, I hope you all have understood this. So this was one technical part which I did not mix up, because it would have been then the section itself would have gone haywire. Excellent. ये संतोष, तो रिवीजन की तो नीड है ही ना. मैंने आपको उस दिन भी कहा था कि nobody can expect or should not expect that you will become master of something like PGBP and later on when you study capital gain in one go. And that is what we are going to try henceforth. And this is the approach. This is the study technique I'm talking about. Now for revising, students, you should not only read the section where you should take practical example and read the question, read the section. Revision भी होगा, and most important, अब वो ज्यादा दिमाग में रहेगा, because now you have practical example to apply. This is the most effective study technique for all law subjects, because law subject को revise करना बहुत boring होता है. You are not comfortable reading the same thing again and again. or rather, even if you're reading, it is not making much difference. It is only rectifying, which is of no help. Now, this example is the best example that you have to remember the section, but also apply to the given case. So this is how you should study and revise after you have studied the basic thing. Chalo, great. Kuldeep is saying, okay, it is saying clear. Kuldeep, now you have said one. So are you asking question on this same question part one? Kuldeep, you have said one. Are you asking this question for another part of this question? That is part one of this question. Okay, so you are just sharing your answer for the previous point only. Anil is saying when expense is deducted later, if you fail to fulfill 43, then in that year we have to read as income. Correct. Again, Anil, you have said 4 into bracket 3. So, beta, is it typo error? Because we are doing 4 2, Anil. Kuldeep is saying for question 1, it is true. So, Kuldeep, are you asking for the next question? You're asking for this. So, beta, please don't do typo errors. Because if you are doing typo errors, it becomes confusing for me. So then please write the correct numbers, beta. So if you are replying to my present questions or you are engaging in the discussion on this point, so write this two. Don't write 1 or 3. Great. Students, now the technique which I want you all to follow always is that once you have studied the basic provision, whatever you have understood, not understood, that is okay. Now take up practical questions. With the practical questions, revisit the provision. That will help you in better understanding, right? But just give me 2 minutes. Okay. So now our approach will be, we will take practical questions, and with each question, we will even study the question. So you will also develop the technique of reading and understanding the questions. And at the same time, we will go back to the provision relevant to that section to even revise. Nagaraja, beta, I have not understood your query, beta. Please clarify your query properly. Okay, Mazia, just allow me some time. Let me now take up this two questions first, because that will help me cover up many things, revision, and then I'll definitely come and explain you the page which you have mentioned, 3.268, right? Okay. So now see what type of questions you will get. One is question on solving, that is the add less, or second is questions where they're asking what? Examine with reasons allowability of following expenses. So now here you may not be asked to do the reconciliation format and find out PGBP. You're only asked to talk about one particular thing and say whether it is allowed, disallowed, etc. So now we go to the questions. So we are solving questions also. Plus, along with the questions, we are revising. So now our revision will be more precise, and now it will be having a longer lasting effect in the form of retaining the questions, because you have a practical uh, question linked to the provision. So what it says, examine with reasons the allowability of following expenses incurred by Manav, wholesale dealer under the Income Tax Act while computing PGBP income for AY 26-27. Fine. If he has exercised the option of shifting out. Now, student, by now you know that there is this old scheme, new scheme. Now, new scheme is your default scheme. And if you are saying option of shifting out, it means you're talking about old scheme. Now, you would have studied in salary also, in HP also, that in old scheme and new scheme, certain expenses have different treatments. Similarly, you will find similar difference even in PGBP chapter. So now when we are revising, we will also cover up that point as we proceed. Now, in this question, you are not required to do any computation. So no need of the reconciliation format. It will be one item. You have to say that what is the effect, taxability, whether allowed, disallowed, whatever. Now, first question is construction of school building in compliance with the CSR activity, and the amount is 560. Now, please students pay attention. Whenever you are talking about PGBP expense side, the first thing that is to be checked is the four conditions, golden rules. Is it related to business? Is it current year? Is it capital? Is it an offense? If the answer for first three is yes, and the answer for fourth is no, your expenses will be allowed prima facie. Then the second step would be checking if there is any specific restriction applicable to that expense. So now when you're reading this, four conditions you have to apply. Is it related to business? Is it current year? Is it revenue? And it should not be in the nature of any offense. All four satisfied, deduction is allowed. Now, when we read about this, now you all know, you all would have studied this. Companies Act make it obligatory for companies to spend some amount for social welfare, which is called as their social responsibility. So, like in this example, the company has spent in the form of construction of a school building. Now, whether this amount is allowed or not. Now, when you go to the provisions of PGBP in detail, in section 37, which is one of the sections of PGBP, we'll be discussing those individual sections also later on. But right now, we are still in our initial stages of PGBP, where we are understanding PGBP and now practicing PGBP with questions. So we have not yet started dealing with each of these section in detail, but that will do. Now, section 37 is one section which gives you deduction for expenses. Now, in this section, there is one important clarification given, and that clarification is about the CSR. So we are talking about the section 37, which is called as residuary expenses. Again, you will see the same four conditions are given that we are following. Now, in this, for some specific expenses like keyman insurance and everything, there is some restriction given, or there is some condition given. Now, in this section 37, you have CSR. Now, explanation 2 to section 37.1 has specifically disallowed CSR. So, what is important to be noted is that if you are doing any expense which is purely in the nature of CSR, why I'm using the word purely, that you'll come to know when I go to part 2. So, if it is purely in the nature of CSR, which is a compulsion as per Companies Act section 135, we have nothing to do with that. We means PGBP does not allow the expense. However, exception is if these expenses are covered in any other provision of PGBP, which is between 30 to 36, then we will allow it. It means we will not allow it on the grounds that it is CSR. But yes, if that expense is already part of PGBP in other sections, which is 30 to 36, then we will allow it. Means we will not allow it because it is CSR, but we will allow it because it is normally allowed in PGBP. Hence, what is clarified that for the purpose of this section, any expenses incurred by the assessee on the activities relating to CSR shall not be deemed to have been incurred for the purpose of business. So if it is purely CSR, it will not be allowed only on this grounds. However, explanatory memorandum to the finance bill where this particular restriction was put in says that if the expense is of the nature already covered in 30 to 36, then it shall be allowed as deduction. So it means merely because it is CSR, we will not allow it. But if it is already covered, like you have done scientific research or you have done any such expense, family planning, etc., which is also CSR. See, family planning is CSR because you are doing it for the benefit of society. Scientific research is also CSR. So if you have done in the name of CSR, but one of these expenses which are specifically covered in 30 to 36 and allowed, we will allow you. But you have done general CSR, which is not covered in 30 to 36, we will not allow you. Now, here what is given, you have constructed a school building. Okay. Is it covered in 30 to 36? Answer is no. 30 to 36 covers what? Your regular expenses like purchases, salaries, rent, depreciation, etc. It is not covering any such expense. Yes, had this been something relating to scientific research, family planning, which is specifically covered in 30 to 36, we would have still allowed it. But since it is neither scientific research, neither it is family planning, it is pure CSR. So your answer is it is disallowed as per explanation 2 to section 37.1. Students, I hope you have understood this. So answer is not important for me. The reasoning, the understanding is more important, right? Very good question. So Kuldeep is asking, sir, we have one more deduction which is for skill development. So will construction or donation for any activity of school be not covered in skill development? No, beta. Reason is you are very correct that even donation for skill development is allowed, but that is only where you are giving it to some government agency which is engaged in doing skill development or running skill development programs. Now, giving donation to school will not be covered in the skill development and hence it will not be allowed in 30 to 36. But good point, beta. So as we just discussed, 30 to 36, if that expense is covered, then we will allow that CSR. And in 30 to 36, there is one section which allows donation for skill development. But if you see that section, so let us revise that also. So when we are revising, let us revise that also. So that section will also get covered. Some 35 DD something. I'm not getting through search option. Oh, okay, this is National Laboratories. This is scientific research. Anybody knows the page number for skill development? I'm not getting it directly here. Should I go to let us recapitulate? That would be making it faster. Yes, so here see what will be covered in skill development. Scientific research. Where is skill development given? Here also they have not covered it. I don't know, it is not appearing here. I don't know why it is not appearing here, but fine. So answering your question, Beda, it is not part of skill development. So construction of school and expenses on skill development are two different things. So you will not get it under that category. Fine, Beda? But there, how can CSR be administrative expenses, Nagaraja? CSR is where you are doing expenses for the benefit of society, like constructing toilets, or let us say setting up some this water coolers, or let us say you are doing some cleanliness drive in some low-lying areas, planting trees. These are all CSR. How can administrative be CSR, beta? So administrative is not the CSR. 242 somebody said. Okay, 242. Where it is, but on 242. I'm not getting on 242. Excellent. Now I had one specific. Okay, so I hope this is understood, students. So let us come back. So the answer for part one is it is disallowed. Now let us proceed. Second is purchase of building for the purposes specified, setting up and operating warehousing facility for storage of food grains. Very good. Now, students, there is this specific section 35 AD. Now, let me give you a gist of this section. What is 35 AD section? So, it has identified some businesses. So, when you see 35 AD, 35 AD deals with some specified businesses. Now, these businesses are called as specified businesses, and the businesses that are covered in this category is this. What are these specified businesses? So you are setting up a cold chain facility, so a cold storage, or you are setting up a warehouse facility for storing agricultural produce, or you are engaged in laying cross-country natural gas pipeline through which gas or crude oil can be transported between one country to another, like India, Iran, etc. Then you are building and operating a hotel which is of 2-star or above category, or you are building operating a hospital with at least 100 beds, or you are building a housing scheme, that is a housing project. You are a builder developer which is under some notified scheme of slum redevelopment, etc. Or you are into housing project under some notified scheme to provide affordable houses. So government has such schemes, you all know that. Then you are engaged in production of fertilizers, or you are running inland container depots, container freight stations. You are in the business of beekeeping, where you produce honey or bee wax, or you are providing warehousing for sugar. So above warehousing was for agriculture. This is for a manufactured product, that is sugar. Or you are engaged in laying pipeline for transporting iron ore, or you are in semiconductor wafer fabrication manufacturing, or you are in developing, maintaining, operating some infrastructure facility. Now, what does 3580 says? If you are in any of such businesses, the most interesting part is we will give you deduction of capital expenses full. Now, when I say full, means what? There is no need to take depreciation. See, normally what we do for capital expenses, we claim depreciation. However, if you are covered in any of the specified business list, you will get the full 100% deduction upfront, and then there are some restriction conditions, etc. Now, what is our point? Our point is we are dealing with a question where two things have to be noted. First, you have opted out of the new scheme. So you are in the old scheme, and one of your business activity includes setting up and operating a warehousing facility for storage of food grains. So this is one of the specified businesses covered in section 35 AD. Now, why I highlighted this? Because for 35 AD, so because for 35 AD, there is a restriction, there is a restriction that this deduction will be allowed only where you are in the old scheme, that is, you have opted out of the new scheme. So this deduction is not allowed if you are continuing in the new scheme. So in case an individual is running specified business, it would be available only if he exercises opting out of the new scheme. Now you have opted out, this is given, and you are running the eligible business. So what is the treatment? This entire 450, which is actually a capital expenditure. Now, if you apply our four rules, what were our four rules? Related to business, revenue nature. So this is not revenue nature, but if you remember, we have some exceptions to these golden rules, and in our exceptions, I've already written that the exceptions are scientific research, family planning, and section 35 AD business. So for them, capital expenditure is allowed, but the condition is you should be in the old scheme, and it is already given you have opted out. So the answer is it will be allowed as per 35 AD. Correct, students? I hope this point is clear. Mustafa, you are saying I have to make a table where what is taxable and exempt in each scheme. Which scheme you are talking about, beta? Great. Yes. So this expense is fully allowed. Had this not been given that you are opting out, then this would be disallowed. Because for 35 AD, today the condition is you should have opted out. That is, you are in the old scheme. Sorry, but I am not getting Mustafa. Still your point. What is DTR and OTR? Okay. Old scheme and new scheme. Correct. So you should make a comparative that these expenses or these deductions are allowed in the new scheme and these are not allowed in the new scheme, so that you can make a list. Definitely, that will be always helpful. Now, coming to the third point. What is the third point, students? Interest on loan, which is payable to Mr. X, a resident. How much it is? 50,000, on which tax has not been deducted. Now, this deals with again one of the important sections which we revised today, but I'll go back to that section. So what was that section? That if the expenses of the current year, then TDS is applicable to you, you should have deducted TDS during the previous year. Now, if you do not deduct TDS, which is the present point, then what will happen? 48.3 will disallow the expense. Now, for disallowing the expense, what does 48.3 says? Check if the payment is made to a resident and it is made in India. Now, many times where it is made is not given, so you'll presume if it is to a resident, you'll presume it is in India. Now, if the payment is made to a resident and in India, then 30% of the expense will be disallowed. This is what is the condition. Now I go back. Interest on loan paid to Mr. X, a resident, on which tax has not been deducted. Now, interestingly, here an important point is, if you remember, when we were discussing this section, I had said that you have to first check whether for the payer TDS provisions are applicable or not. And I said, for this, you will study in detail in the TDS chapter when it is applicable, when it is not applicable. But now this question requires me to take you to that condition also. Now I'm explaining you the condition from TDS chapter, that is TDS when applicable. Now I said TDS applies to payer, but within payer there can be two categories. Individual HF is the payer or any other person is the payer, like company, partnership firm. Now when you study TDS chapter in detail, you will find that for many expenses, not all, but for many expenses, the condition is if the payer is individual HF, TDS will apply to that payer who is individual HF if in the last financial year the turnover exceeded 1 crore if it is business or 50 lakhs if it is profession. It means for some expenses, the condition is that the payer, if is individual HF, should have the turnover in the last financial year exceeding the limit. Then only in the current financial year, they are supposed to do TDS. Otherwise, they are not supposed to do TDS. Now here, what was given? It is given that, now firstly, who is this assessee? The assessee is Mr. Manav. So he is individual. And what is given over here, that individual has paid interest on loan and they have said that TDS has not been deducted. But since the payer is individual, you'll have to check whether TDS was applicable, because interest is one such expenses for which this condition, which I've just explained below, is applicable. So in some of these expenses, interest is covered, where you have to check if the payer is individual HF last year's turnover. Now, what is the last year's turnover given? It is given as 202 lakhs. So 202 lakhs means it is 2 crore, exceeding rather 2 crore. So you are satisfying this condition. It means you should have deducted TDS. Now, what is said? That since you did not deduct the TDS, what will be the answer? It will be disallowed under section 40A. And then there is further subclause. You don't get into subclause. Even if you write 40A, that is sufficient. What is disallowed is not full amount. Since you have made payment to a resident out of 50,000, 30% of it, that is 15,000, is disallowed. So balance 35,000, which is 70%, is allowed. only 15,000, that is 30% is disallowed. Correct, students? I hope this is understood by all. Then comes commodities transaction tax. Now, commodities transaction tax is a tax which you pay whenever you are doing trading of commodities through stock exchange. Now, interestingly, again we have a section 36, which allows deduction for certain expenses. And in section 36, the last clause of section 36 allows deduction for commodities transaction tax if you are in the business of commodity trading. So if commodity trading is your business, then section 36 bracket 1 allows you deduction for the commodity transaction tax that you would have paid. So what does section 36 bracket 1 clause 16 says? It provides that an amount equal to CTT paid in respect of taxable commodities transaction entered, and most important, in the course of business, it allows you deduction. So where you are in the business of commodity trading, and when you have done this commodity trading through stock exchange, stock market, and you have paid the commodities transaction tax, which is compulsorily payable on the stock exchange, it will be allowed as deduction. So nothing is mentioned, but we are presuming. Many times your answer will be presumption based. Presumption is this is business transaction, that is you are in the business of this. If it is presumed that you are in the business of commodity trading, then this will be allowed under section 36 bracket 1. Again, you need not remember the clause 16. Even if you write 36(1), that will be sufficient. So this will be a conditional answer, students, that if you are in the business of commodity trading, it will be allowed. I hope it is clear to all students. Perfectly clear. Aditya, answer will be same if in the previous point, that is of interest payment, if the payment is made to a non-resident, similar restriction is there. The only difference is 100% will be disallowed. So the difference between payment to resident and non-resident is payment to resident 30% is disallowed, payment to non-resident at Aditya 100% is disallowed. That is the only difference, right? Excellent. So see, now this is the approach which I'm talking about. So now when we are revising, we will revise it with question. So it helps in two ways. One, provisions get revised in a much effective manner because you are now having a practical question. Two, you are also developing the skill of handling the questions, understanding and approaching the questions, right? Sure. Now we'll take our break of 15 minutes. We'll have some paid puja done. So at your end also, yes, Kuldeep, bullion is a commodity. So what is bullion? It is raw gold, silver. Raw gold, silver is called as bullion. So it is commodity. So students, we connect in 15 minutes and we continue with this approach of revision with practical question solving. Fine. Thank you. Yes, Kuldeep, you are correct. You're right, Kuldeep. So students, let us go to the next question and continue our revision with this question so that the sections which we studied in past 2, 3 classes will get consolidated. So what is question 4? Examine with reasons whether the following statements are true or false. 1. For a dealer in shares and securities, security transaction tax paid in recognized stock exchange is a permissible deduction. Now, just now in the previous question, we discussed about commodities transaction tax. Similar to commodities transaction tax, you have securities transaction tax. And again, the condition is same, that where you are in the business of dealing in securities. So you are a dealer of shares and securities. So many people are into this business, or you are dealing in commodities. So anyone, you are in that business. So when you are in that business, and today all these things, when they are routed through stock exchange, the stock exchange levies a particular tax. On security transactions, it levies security transaction tax, which is in short called as STT. And on commodities transaction, it levies a tax called as commodity transaction tax, CTT. Now, PGBP section 36 bracket 1, clause 15, clause 16 has specifically allowed the deduction for both these expenses. So for both these expenses, you can claim deduction under PGBP. Obvious, the 4 conditions applicable over here, the first condition is related to business. So only where this transaction is related to business. Now, what would be if it is not related to business? So where you are holding these securities or commodities as a investment. So this will be taxable under the head capital gain. Then it will not be in the course of business, and then this particular deduction will not be available. So this deduction is available only when these transactions are entered in the course of business. So the answer to this, now see, the question here is not allowed or disallowed. It is saying true or false. So what is the sentence? Security transaction tax paid is permissible. The answer is true. Correct? Excellent. Yes, Mustafa Beda. So you have reconciliation in other topics as well. And every topic has its own set of conditions, rules. But yes, the formatting is similar. You can say so. Right. Okay, students, let us proceed. 4.2 was done. So we come to 4.3. It is mandatory to provide for depreciation under section 32. The answer is true. So we have not yet studied 32 in detail, but it is dealing with deduction of depreciation. And in that, when you study 32 in detail, you will find that the law has added an explanation in section 32 saying that taking depreciation deduction is not optional, it is compulsory. So answer is true. I'm not going to 32. Why? Because we are going to specifically cover 32 in very great detail. Next. Okay, Nagaraja is asking some question. Yes, beta Nagaraja.
Sir, sir, my voice audible?
Clearly audible. Please tell me.
Sir, security transaction tax, that means commodity transaction, taxable commodity transaction, old regime and versus new regime, sir, is allowed,
See,
not allowed.
here there is no mention of regime, so it is allowed in both. Only for some specific expenses there is a difference between regime. But here for STT, CTT, there is no such restriction, so it is allowed under both regimes. Right, beta? Nagaraja.
Yes, sir.
So it is allowed in both regime, beta.
Okay, sir. Thank
Fine?
you.
Yeah,
Okay.
fine. Now, next point, the Mediclaim premium paid to the GIC, which is the General Insurance Corporation, by Mr. Lomesh for his employees by account paid check is a deductible expenditure under 36. So now again we have to say true or false. So let us go to 36. So let us say today we'll cover entire 36. Even if not covered in this question, we'll come back and read the entire 36. So now Mediclaim or medical insurance premium. Interestingly, see what are our four conditions related to business, current year, revenue, not an offense. Had this Mediclaim been for yourself or your family, it would have got disallowed. Why? The first condition itself is not satisfied, because when you are paying an expense for your family, it is a personal expense. It is not related to business. But here you are paying it for employees, for which there is a specific deduction. What it says? Premium paid by the employer for the health insurance of employees. Now, interestingly, there are two types of insurance, health and life. I'll come to life. Be clear, 36(1) clause 1B is only covering health insurance. So what it says, that where the employer has taken a policy to keep in effect an insurance on the health of its employees, and that policy either is of GIC or of any other insurer who is approved by IRDA, that is Insurance Regulatory Development Authority, then such a expense is allowed as deduction. Now, what is important to be noted over here is this expense is allowed as deduction with one condition, that it should be made by any mode other than cash. Now see, we have a section 40A bracket 3, which we discussed some time back in relation to one of the previous questions, which requires payment only by account, paycheck, draft or electronic modes. But 40A3 is not applicable to health insurance. Health insurance is covered under 36(1)B with its own restriction, and here the restriction is only cash. So here bearer check or even cross check are also allowed. So account paycheck is anyways allowed, but we are not in 40A3. This is what I want to clarify. Why? Because what happens, students, I have seen that many times students link all these sections with 40A3. But some sections have their own individual restriction conditions. Like in this is not having restriction of 40A3. It is having its own restriction. The restriction is that the payment should not be made only by one mode, that is cash. So all other modes are allowed except cash. So this is what you should be very, very clear with. Correct. Now I come to life insurance. Now let us say you have paid life insurance premium. Firstly, for yourself or family, disallowed. Why? Because it is personal. Even for your employee, it is disallowed. Interesting. So health insurance for employee is allowed, but life insurance premium for employee is also disallowed. However, when you go to section 37(1), it says that where you have taken a specific life insurance premium called as key man insurance. Sorry. So where you have taken a specific life insurance, which is called as key man insurance, either for your partners or directors or even your employees' life. But it is not a regular life insurance, it is a key man life insurance. That is what is allowed. So students, keep this in mind. There is a difference for health insurance and life insurance. Health insurance for employees is always allowed, with only restriction it should not be paid in cash. Life insurance premium for self, family is anyways disallowed because it is personal. For employees also is disallowed if it is a regular life insurance premium. But if you have taken a special life insurance called as the key man insurance, which may be for partners, directors, employees, or anybody from your business, even the owners, it will be allowed. So life insurance, special life insurance key man is allowed. Other life insurances are not allowed. So coming back, Mediclaim paid to GIC for employees, and it is done by account pay check. Had it not been account pay also, let us say, had it been a bearer check also, still the answer would have been that it is allowed. So just for your understanding, I've slightly modified, tweaked the point. So even if here they would have mentioned bearer check, it would have been allowed. Because here the restriction is only on cash payment, all other payments will be allowed. Why Kuldeep beta, when I'm allowing bearer check, why cross check will not be allowed? Everything is allowed here. Bearer check, cross check, account pay check, everything is allowed here. Yes, Kuldeep, correct. Only for this payment, but only for this payment, that is health insurance. Good, Navneet. Okay. So that's why I'm trying to emphasize on students, don't mix two different section conditions into one. Different sections have different requirements. Now next is under section 35 DDA, you are allowed deduction for what? For VRS. Now we all know what is VRS. So when you want to remove your employee before the retirement age, you cannot do it forcefully because that will draw legal consequences. Instead, you can offer them a scheme called as the VRS, which is the voluntary retirement scheme, where you pay them a lump sum amount called as the VRS compensation. I'm sure you would have studied this in salary chapter because this becomes the income under that salary for employee. Now in PGBP chapter for employer, it becomes the expense. Now this expense is allowed as deduction under 35 DDA. So we are just revising that. This section has only 2 points. One, the amount should be paid. If it is outstanding or due, we will not allow it. So it should be paid. Second, it will be allowed 1/5 over 5 years. So it will be allowed in 5 installments, 1/5. Now, what is the question here? So this is what is section 35 DDA. So keep in mind 35 DDA allows deduction for VRS compensation. 2 conditions, it should be actually paid and not only due, and it has to be spread over 5 years period. So 35 DDA amortization of expenses incurred under eligible VRS scheme at the time of retirement alone. Now see, this is where the point is important. The question is true and false. And when you're reading a true and false question, I again repeat, understanding and interpreting the question is very, very crucial. If you don't interpret it correctly, your answer may be wrong. I repeat the sentence again. Under 35 DDA, amortization of expense incurred under eligible VRS at the time of retirement alone can be done. Now, this is where we have to be cautious while answering because it says, I need payment. So merely if you are retiring, I don't think the answer should be true. See, deduction is allowed. But when I read this word retirement alone, I get a feeling that they are trying to bypass the condition of payment. So the answer should be false. It is allowed, but not only on retirement alone, it should be paid also. So merely my employee retired in the current year, but I have not yet paid the VRS, I will not get that 1/5 deduction. 1/5 will start from that year in which I have actually paid. So the answer for this is false, even though otherwise this whole point is allowed expense, but only because of this word alone, the answer changes. Next, individual is engaged in trading activities, exercising the option of shifting out. Okay, under 115BA, can claim additional depreciation in respect of. Students, the answer is false. But again, I'm not explaining the provision because it is again dealing with additional depreciation. You'll get to understand this in detail when we go to additional depreciation, right? Navneet is saying so like gratuity provision made for gratuity to be paid and deposited in separate bank. Deduction 1/5 is allowed. It will not be the case of VRS. See, firstly, Navneet, let me clarify one thing. For gratuity, the deduction is allowed full, not 1/5. So whatever gratuity you have deposited, the gratuity provision which you have deposited in approved gratuity fund, it is allowed full. There is no 1/5 condition. Point number one. Second, for VRS, there is no deposit in any bank account. It is always that you pay to the employee. So see, the difference is, in case of gratuity provision, you deposit it in a bank account which is opened under the approved gratuity scheme or approved gratuity fund. So you are depositing the money in bank and you are getting deduction. This is in case of gratuity provision. In case of VRS, you are actually paying the VRS compensation to the employee, and from the year of payment, you get 1/5. So Navneet, I hope your query is answered. Yes, Kuldeep. Only when actual payment of VRS is made to the employee, that is, you are giving the compensation to the employee, from that year, 1/5 will start, not in the year of retirement. So retirement may have happened, let us say in December, the employee is retiring, but you are not clearing the payment till March. You will not get deduction in this financial year 25-26, right? Okay. Further, examine with reasons allowability of expenses. So similar question. Now, provision made on the basis of actuarial valuation for gratuity. So same point now what we were discussing. So the relevant section is 40A bracket 7. No payment on account of gratuity was made before the due date. Now see, anyways, where you are making provision, right? Payment will anyways not be made, because the payment will be made only in the future when the employee has actually retired. So anyways, there is no payment in the current period. But what the question, or sorry, what the provision requires, that whenever you are making a provision for gratuity, which is where the employee will be retiring in future, so for that future payment, you are keeping aside small amount as provision. Then section 47 requires that this amount will be allowed only when it is deposited in approved gratuity fund. So by making a provision, but there is no deposit in approved gratuity fund, the deduction will not be allowed. So the answer is, it is disallowed, because there is no deposit in the approved gratuity fund. Yes, Kuldeep, you're right. Very good, Navneet. Sadia says, why is the 25,000 allowed as deduction even though it exceeds cash payment limit under 40A3? Is it because it was paid by cross check? Which 25,000, Sadia beta? You're talking about which point, Sadia? Where is 25,000? Navneet, what is mercantile basis, beta? You're talking about which mercantile basis point, beta? I also think so, but I cannot generalize. So that is why I have asked her. So Sadia, are you asking about the previous question, this one? Sadia, is your question related to 4.2, which we did at the start of today's session? So beta, that is what is the point. No, cross check is in fact not allowed. You have to make only by account pay check. Cross check is not allowed. But here, anyways, the point is, we have said that it will now be taxable in the year of payment. Why? Because you have breached the condition. You should not have paid by cross check. You should have paid by account pay check. Since you are paying by cross check, you have breached the condition of 40A3, and that is why we are saying it should be treated as PGBP income. Please understand, they are asking you to treat it as income now. So same point, it is disallowed only, but we are not saying using the word disallowed. Why? Because it is past year's expense where entire deduction is claimed. That year is closed. Now we are in the next year. It is like bad debts and bad debts reversed. So whatever expense you have claimed. Now, since you have defaulted at the time of making payment, you are reversing it. Reversing it means you are now treating it as your income. Are you getting this? So we are not allowing it now. It was allowed earlier because at that time you had not paid. So if you had not paid, we don't know how you are going to pay. So we have first allowed it on accrual basis. Now in the current year, since you have made payment wrongly, now how we will treat it? We will now treat it as your income. Correct, Kuldeep. But I think, Mazia, it is clearly mentioned that the payment is not made. So we are treating it as that the payment is not paid in approved gratuity fund. They have already mentioned behind I1. See, however, no payment on account of gratuity was made, means they have not deposited in a approved gratuity fund. This is what I think impression we will get, na? That it is not being deposited. They themselves have mentioned this, Mazia. So that is why we are going by that treatment. Perfect. Good, Sadia. So you have understood. Now, next point. Purchase of oil seeds for 50,000 in cash from a farmer. Now, see, when you read this, the question is, which section is this point targeting? Because from the point, you should also understand which section you have to read or check. Again, the point is when they are saying payment is in cash, the moment they say payment and in cash, the only section bells that ring is 40A3. 40A3 says payment in a day for a bill exceeding 10,000 should not be made by cash, not by cross check, not by bearer check. Should be made only by account pay check, draft, or online mediums. Right? So if you look at it from 40A3, bare provision, this is disallowed. However, you have exceptions in 40A3, which we studied in our previous class also. I'll just open up that again for your reference. So Rule 6DD provides some exceptions where this section will not apply. That is, even if you have made payment exceeding the limit of 10,000 or for transporter 35,000, and even if it is made in cash, it will still be allowed in following cases. Now, out of this point is very important. Payment is made for natural produce and it is paid directly to the grower. Both things are important. It is for a natural produce and you are buying it directly from the person who has grown it. Now, with this, you come back to the question. So what it says, you are purchasing oil seeds. Oil seeds are natural produce and they are directly purchased from the grower, that is the farmer. So you are very much fitting in the exception, hence allowed. Yes, Kuldeep, very good. It is allowed. Huh? It is not allowed. It is allowed. Correct, Kuldeep? Yes, Navneet, but here this point is not on taxes. No? Good, Ashlesha, Kuldeep. So Dhanalakshmi, yes, correct. Your point is correct. Very good. Very good. Naveen, Nagaraja, very good. Now, next point is tax on non-monetary perquisites provided to employees. Now, what is this tax? This is the income tax. Now, interestingly, in salary chapter, students, you have studied that an employer provides to its employees certain facilities or benefits which are called as perquisites. And these perquisites are part of salary income of employee. Now, interestingly, you will find that in industry, for some employees, the employer is providing them facility benefits like it is providing them car, it is providing them a flat, it is providing them credit card, it is providing them club facility. So it is providing them perquisites. Let us say the perquisites provided are worth rupees 1 lakh. Plus, whatever income tax will come on this perquisite So let us say averagely 20,000 is the income tax coming on this perquisite. Interestingly, you will find that in industry, the employers are giving you perquisites also, that is the facility benefits also, and whatever is the income tax on that perquisite, the employers are themselves paying your income tax also. Now, we are talking about that employer. That employer is making payment of your income tax on the perquisites. Now, the question is whether this will be an expenses allowable to the employer while computing his or her PGBP income. Okay, very good, Dhanlakshmi. Very good, Naveen. Students, we studied this point in our notes. The very first disallowance is what? It is disallowance for direct taxes, and it may be your own income tax or employer paying income tax of perquisite income of employee. So any income tax, whether your own income tax or employer paying income tax on perquisite income of employee, ultimately it is income tax only. So the simple answer is any form of income tax, whether of yourself or your employee's income, the perquisite income which you are paying, all are disallowed. So the answer for this will be that this is income tax, so it is disallowed under section 40 clause A. Yes, subclause will be something 3 or 4, but you need not go into the subclause. Even if you are able to recall the main section 40 clause A, that is sufficient. Yes, Navneet, right. Very good, Anil. See, Mustafa Beda, from salary you will not get answer over here, because in salary there is a different provision, because in salary this becomes your income. You are the employee. When I do any favor for you, I make any payment of any expenses that belong to you, then what I am doing is I am doing a favor, I am providing a benefit. This in your hands, Mustafa, is an income. So we have to treat it from the income perspective of salary head, whether it is taxable or exempt. But whatever is the answer over there, that has no impact over here. No, beta Mustafa. Over there also it is exempt. Please go and check again. It is exempt over there in the hands of the employee. What is exempt? Where the employer has paid income tax on your perquisite salary. So if the employer is paying income tax of your perquisite salary income in the hands of employee, that is you, this is exempt under section 10 bracket 10 double A. Sorry, 10 double A or 10 bracket 10 double A triple A something. Please check. Let me know the section number. Ashlesha. See, where employer is deducting TDS. Understand, but TDS is not an expense of employer. So there is no question of allowability or disallowability, because TDS is what I am collecting from you and depositing it with government. So there is no deduction of TDS. So where employer is deducting TDS on your monetary income and depositing it with government, anyways, the employer is never taking deduction of TDS because it is never an expense of employer. Right, beta? Correct. Perfect. Now, payment of 50,000 credit card for fire insurance. Now, what is the point? You have made a payment. From which section is attracted? 48.3, which says that payment of any expenses exceeding 10,000 in a day, if made by cash, bearer check, or cross check, it will be disallowed. But it will be allowed if it made payment by account pay check or any type of recognized medium. And credit card is a recognized medium. So this is fully allowed because restriction of 48.3 are satisfied. Yes, correct. Very good. Very good. So now everyone is getting this. Excellent. So all of you all who have answered for this, perfect. Next, salary payment of rupees 10 lakhs. So again, you are showing expense of salary. How much is the amount? 10 lakhs. To Mr. X, who is outside India, and the company has not deducted TDS. What will be the treatment? Which section is attracted? 40 clause A. Some subclause, but you need not get into that. So I'll show you the actual section. So we'll just have a actual view of 40 clause A. See, 40 clause A, I simplified it into two parts. One, payment of direct tax is disallowed. Second, where TDS is not deducted or not deposited. But if you remember, I had already mentioned that 40 clause A has many subparts. See, so first, 40 clause A, subclause 1. It deals with only three payments: interest, royalty, fees, where outside India or to a non-resident. Correct? And on which tax deductible at source, and such tax has not been deducted or after deduction not been paid before the due date of filing returns. So what it says, if this happens, then what will happen? Your expenses will be disallowed. Correct? So first disallowance is where any of these three expenses are paid where outside India or to a non-resident, on which tax was deductible, but it is either not deducted or not deposited up to the due date of filing returns. In such cases, it will be disallowed. Right, students? First. Second is where it is made to resident, but I am not right now interested in resident because our point is of non-resident. So we'll proceed to go to further. Now this is of income tax. So where any tax has been paid, it will be disallowed. That is in clause, subclause 2. Not interested. Now I'm interested in this. What is it? Sum payable under the head salaries, where it is payable outside India to a non-resident. If tax has not been paid thereon nor deducted, it will be completely disallowed. This is what is our point. So you have made payment of salary outside India and which is not allowed. Why? Because you have not deducted TDS. So as per 40A, it is 100% disallowed. Why? Payment is to outsider, outside India person, and you fail to comply with the TDS provision. So it is 100% disallowed. Okay, Navneet. Very good, Shamli. Mustafa Bida, our point was income tax paid on perquisite income of employee. Correct. You're telling me about a perquisite provision. We were in one specific thing, that is employer is providing you perquisite and employer is paying the income tax on that perquisite. So what you are referring to me is not that specific point. You're referring to me a provision of perquisite. You are correct. This is obligation of employee paid by employer. It is taxable. It is a perquisite. But now in that, this one thing where employer has paid your obligation of income tax on the perquisite income, that is what is exempt. Please go and check. But right now, I think you should focus on PGBP rather than salary. Ashlesha is asking, so salary expense 10 lakh is disallowed. Yes, correct. So that is what we have written, Ashlesha. Sir, in NR case, how tax deposited as no PAN? See, you will study this later, beta, that in case of non-resident, when there is no PAN, how do you deposit the tax? So there are exceptions. Even in case of resident also where PAN is not there, you can deposit the tax. There is no problem, correct? So there are specific provisions where PAN is not available. Still, TDS able. In fact, it has to be paid. Mustafa beta, I'm saying this amount is exempt in the hands of employee in the salary chapter itself. Which amount? Very specific amount. Employer has paid income tax of your perquisite portion of salary. This is obligation of employee paid by employer, correct? Covered in section 17(2) clause 4, correct? But as I said, under section 10, bracket some 10 AA triple A, I don't recall that. Over there, it is exempt. I'm not talking about exempt under PGBP. How can it be exempt under PGBP? In PGBP, for employer, it is an expense. Expense cannot be exempt. Incomes can be exempt. So it is exempt in your hands. You are the employee. So under salary chapter, it is exempt, not under PGBP. See, Shamli has given me the section. Section 10 bracket 10 double C. Not 10 double A. It is 10 double C. So if you're not getting in salary chapter, go to the chapter on exemption. That is section 10. And in that, search for section 10 bracket 10 double C. That is where you will find exemption in the hands of employee. Yes,
Sir, even
Nagaraja.
deduct tax but not deposited. While
Sorry, beta. I think I could not hear you completely. Please repeat.
so salary payment of 10 lakh rupees to Mr. X outside India by company deducted of tax but not deposited.
Still disallowed. Na? Both things are required. Na? See, we just saw the section. Go back to the section. What it says has not been paid thereon nor deducted. So both things are required. Na? Correct, na, Nagaraja? So what is your question? You
Same
have to do
questions.
both. Deduction also and deposit also. Even if one thing is missing, disallowed.
Okay, sir.
What is your doubt? I'm still not getting why you are confused in this.
Same question, sir. Section 40A.
What is the question, beta? I have explained. Both things are required. So if you do one and you don't do the other, still it is disallowed. This is my answer. Now still what is your doubt? This is I'm asking. I've answered your question. It is disallowed in your question also.
Sir,
Where is the confusion? That is what I'm asking.
this type of question, sir. Section 40A.
Sorry?
Section 40A, the three same questions, sir. When tax deducted but not deposited.
So beta, I gave you the answer. It is disallowed. I've already given you the answer. Now I'm asking now still what is your question? You are saying same question. So my answer is same now. I'm still not
Only
getting where
allowed.
you are confused.
So only allowed when paid.
But complete your sentence. You are speaking half, or at least I'm hearing half. Why you're taking a pause? Please complete. I'm not still getting your query. Which point you are confused? Please highlight. What the question say, what the section says. See, the section is very clear. If it has not been paid nor deducted. So it means both conditions are required, na deduction and payment both. In fact, both are complementary. You first deduct and then you pay. If you have not deducted, not allowed. If you have deducted but not paid, still not allowed. Understood? Or still a query? Nagraja, beta, I am waiting for you. You may come back, beta. I'll proceed. Okay. Now, payment is made in cash, 30,000 to a transporter. Now again, cash payment section is 48.3. Now for all payments, it is 10,000, but for payment to transporter, the limit is raised to 35,000. Hence, this will be allowed. Correct? Let us proceed. 6. Again, examine with reasons whether following statements are true or false. Now, payment made in respect of business expenditure on 16th of February through a cross check is hit by provisions of 48.3. Now we have to simply say true or false. Now see again, understanding provision is a different thing and understanding or applying it is a different thing. So you may have understood the provision, but applying it in this question, because our answer is to be very specific, true or false. So what it says, payment made in respect of business expense. So business expense is there, so that is not a challenge. It is on 16th of Feb, so it is during the financial year. That is also okay. Of 25,000, so it is exceeding the 10,000 mark, and through a cross check. Now the question they are asking is it hit by provisions of 48.3? I think answer is true. Correct, na? It is hit. Mustafa beta, it is section 10 bracket 10 double C. You are saying 10 CC. It is 10 bracket 10 double C. Do one thing. If you're not locating it in the module, no problem. I have always asked you all to refer to Bare Act. I always refer to Bare Act when I want to find something. So you also go and check it in Bare Act. You'll find it there. So in salary chapter, it is an exemption in the hands of employee. In the PGBP chapter, it is disallowed as deduction. This is the answer. Okay, coming back. Wow, Shamli has given the page number, beta. You can go and check it on page number 3.14 of salary chapter. Kuldeep, hit means whether this provision will be covered by that section and will be disallowed by that section. Yes. So this is what I'm saying. Now you know the provision, but you should be also able to apply to the given question. So in fact, even understanding question is important. So you're right. So it is hit means it is not allowed. So hence the answer is true. Very good, everyone. Excellent. No, beta Mustafa, there is no argument. It is not of arguing. It was you're trying to find out, but you're not able to find out. So answer is true. Yes, Nagraj, are you ready with your question? Because you have raised your hand. Okay. Let us proceed. It is a condition precedent to write off in books of accounts the amount due from debtor to claim the deduction for bad debts. Now, this is interesting. Now, this is relating to section 36(1), where bad debts are allowed as deduction. So what is the question first? They are asking, or we have to say true or false, that if you want to claim deduction of bad debts, is it necessary that the amount should be written off in your books first? That is, if you are not writing off the bad debts in books, can you simply claim the deduction in income tax? That is what is their question. So the answer is given in section 36, subsection 1, clause 7. What it says, that you will get deduction of what? Of bad debts, but there are some conditions. What are the conditions? First, the debts or loans should be in respect of business. That is okay. Now the most important part relevant to us. The debt should have been taken into account in computing the income of the previous year in which such debt is written off, or of an earlier previous year, or should represent money, etc., etc. So what it is saying, two conditions. First, the debt should be in respect of business. Second, the debt should have been taken into account in computing the income of the assessee of the previous year, in which such debt is written off, or of an earlier previous year, or should represent money lent in the ordinary course of business. Now, what it says further, amount of debt taken into account in computing the income of assessee on the basis of ICDS to be allowed as deduction in the previous year, in which such debt or part becomes irrecoverable. So again, what it is saying, it is written off as irrecoverable. Therefore, writing off in the books of accounts is an essential condition. So until unless you have actually written it off in your books, PGBP will not allow you deduction. Yes, Anil. Need. So the basic condition is in earlier years, this amount is part of income. Now, why they are saying part of income? Because how do we pass journal entry? So debtors debit and sales credit. And the moment you credit sales, then in that case, it becomes your income. Right? Yes. So answer is true. You have to write it off first. So this statement is true that it is an essential condition. So here they have said it is a condition precedent. Condition precedent means it is an important condition that you have to first write off the bad debts in the books and then only PGBP allows you deduction. So the answer is true. Next, failure to deduct tax at source. So you have failed in accordance with the provisions of this chapter. This is the TDS chapter. Inter alia, from the amount payable to a non-resident as rent. Now this is interesting, or royalty will result in disallowance while computing the PGBP income where the non-resident payee has not paid the tax due on such income. So what is your answer? True or false? Okay. There are two truths, three truths, four truths, five truths. Navneet, you have to say allowed or disallowed. Sorry, you are saying disallowed. You have to say true or false. See, allowed, disallowed, you are saying is part of section. Now here section is not important. You should be able to answer with respect to the question, which is only true or false. Okay, so till now there are all truths. All truths till now. Ashlesha, please say true or false. Don't say deduction allowed or disallowed. This question is not about. I'll explain that, Nikhil. Just let me first complete the answer. Otherwise, it will be confusing. Okay, so I've got the first false. All others were true. Okay, all are saying true. Only I've got one false. Why false, beta? Because all are saying true. So why false? So again, see, this is what I'm trying to emphasize. Knowing section and understanding section is one thing, but answering a question is a different thing. You have to understand the question. You have to answer it in the requirement of the question. So what it is saying, failure to deduct tax in accordance with the provisions of this chapter. This is the TDS chapter. Inter alia, from the amounts payable to a non-resident as rent royalty will result in disallowance while computing the business income where the non-resident also has not paid the tax on such income. Whether true or false. Anil, you have changed your answer. Anyways, whoever is saying false, you have to give me a reason. And I'm asking reason only to false because all others are truths. So if in all truths, if I get one or two, rather, I've only got two false. So I want to know from false why it is false. Because reasoning is very important in any law subject. Answer is never important. Okay, so now I've got 3 false. But I want reason for false. Huh? Where is employee concern here, beta? Anil? Where is your employee concern, beta? There is a failure to deduct TDS from the amount payable to the non-resident as rent or royalty. Kuldeep, if I give any answer to you like this, will it be okay? I'm asking you why false. You're writing a section number. Is it sufficient to answer the question? Anil, how is it default of the non-resident? You are making payment to a non-resident. So you have defaulted in making, in deducting TDS. Where is the default of non-resident? Let us go back to the section. Yes, I think it is first one only. 40A1. But it says, see, I have marked interest, royalty fees for technical services or other sums chargeable under this act payable outside India. True, false. Majority are true, 3 are false. I want to know why false. Is it because rent is not written over here? They are saying interest, royalty fees. In the question, there is rent or royalty. So is because rent is not written here. That is, Ashlesha, my question. Whether rent is included here or not. Very good, Ashlesha. You're right. See what this provision says. Any interest, royalty fees for technical services or other sums chargeable under this act. If you are paying rent to someone, is it not chargeable to tax under this act? It is chargeable. Income tax is payable on rent. So rent is also covered. So answer is true. Correct? Students, your homework is this question 7. Then question 9. Seven, 9. Okay, that's it. 2 questions. Next class, we will discuss some provisions in detail, including depreciation and including others. And also we will answer these questions. But please, while studying, answering, go back to the section along with the question. That will help you in developing your understanding of the question better. Shravani is asking, sir, the direct tax like IT will be calculated based on provisions of PGP, then how it can appear in P&L statement and disallowed? If IT is there in P&L means it's calculated based on provisions of PGP, right? See, Shravan, understand one thing. P&L debits any expense as per the provisions principles of accounting standards. Till now, whatever accounting P&L you have seen, have you not seen taxes in that? In every P&L you see tax and they are all income tax only. Why? because for accounts it is a business expense. It is an expense of that entity. So P&L will debit it. Na? P&L is not prepared on PGBP provisions. Had P&L been prepared on PGB provisions, we would not be required to do the reconciliation at all. P&L is prepared on the accounting provisions, accounting standards, accounting principles. That is why you have to do reconciliation. Correct, beta? Excellent. So students, two questions for homework. And please revise provisions. Come back with your specific queries on questions because that will help you develop your most minutest and the deepest understanding of that topic. Please. Yes, I know that, Lingar. That is why today, instead of going by theory revision, I am taking practical revision because when you look at any section with an example, it makes the clarity even more sharper and deeper. So with this, let us conclude, students. Thank you. Thank you very much. Let us connect again next class. Yes. Thank you, everyone. Yes, sir. Manishji, good day to you. Bye.